Well, hello there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you this Thursday afternoon market recap. Once again, surprise, surprise, sellers are flooding the market. Dow Jones Industrial Average down 119 points on the daily candle. The S&P closed down just at or right about 12 points, and the Nasdaq was down 25 points on the daily candle. Yesterday I referenced this type of chart pattern. Generally what you like to see, at least on a market, breaking out and establishing a new high, is to see the back test of that old macro pivot point. At the moment, we broke above that 5,173 level. On Wednesday, we saw some buyers come back into the Nasdaq. However, as at the close on Thursday, the price action on Wednesday has been negated by this engulfing type of candlestick pattern. It doesn't mean that we're seeing a false breakout or a legitimate breakdown. It just means that that there is mixed emotions and mixed sentiment and psychology at this level, which hasn't actually been confirmed by the Dow Jones Industrial Average or the S&P 500. What a week, or what a difference a week's worth of trading can actually make. Here we were speaking about the Dow Jones Industrial Average last week. We had this target on the Dow Jones at 18,139. We got very, very close to it at the beginning of this week. We may have even touched it actually. The high was 18,137. So we're literally 2 points away from our target. But the actual bullish price action last week has been completely negated upon these first 4 trading sessions of this week. Obviously, we have Friday to get through, but at the moment, we are left with an engulfing type of candlestick pattern, if not a one black crow. This in and of itself is a very bearish type of candlestick. It is showing us once again that at this critical level of the right shoulder, or potentially some form of a resistance level or a continued resistance level, the psychology and sentiment of market participants is starting to shift. There's been a lot of speculation as to whether this consolidation, this sideways market action, is anything bigger than that of a consolidation. Generally, we can see this happen in the form of price or in time. At the moment, we haven't broken down below that 17,452 trade entry, and we're nowhere near our target on the Dow Jones, if in fact that confirms down here at 17,210. At the moment, if we analyze the actual chart pattern of this market, you can see that maybe potentially we have made some form of a left shoulder over here, dating back to late 2014 and the beginning of 2015. We have made some form of a higher high, at least on 2 occasions. But right now, at least for the past 2 months, we have established 3 lower highs on the Dow Jones Industrial Average. Again, mixed signals at this particular moment in time. Very flat on the overall market, but given the price action which we have seen this week, it really does look as if it does look as if this support level down here fails at 17,500, it will be a very quick ride on down to 17,210. Outside of that, this weekend in Pivot Point Pro, over that 80-minute or in and throughout that 80-minute class, I will bring you an update this week on Dow Theory because it's very timely given, of course, the nature and the predicament of this market. A very in-depth market analysis, which I'll walk through. This will be the last market update for this week. Outside of this, obviously today or at the end of market trading, Amazon has reported its earnings. And as at the futures or in the after hours market, Amazon is trading up here 18.5% where it closed. It's trading up here about 566, 565. So be paying attention to the price action on Amazon. I do not have a legitimate entry. I want to see how the daily candle forms, but it will be a stock which we speak about over the weekend in great detail. Outside of that, on Wednesday, Caterpillar reported its earnings and it finally made, surprise, surprise, it finally made that cycle down to $78 or $77 a share. It closed at 76 and 88 cents a share on Caterpillar. If we zoom out and have a look at the weekly, it's looking very, very bearish. However, we are at macro support and we have held this support since the year 2012. If this support level breaks, and I mean a definitive close on high volume, then we'll be looking at lower lows on Caterpillar. Again, I'll give you this update and bring this update to you over the weekend in that pro analysis workshop class. Outside of that, be selective with your individual trades. Again, volatility continues to whipsaw traders back and forth when it looks as though we're gaining a little bit of traction to the upside. Surprise, surprise, resistance holds and we sell back off. At the moment, we are once again moving back into support. So as the market looks somewhat bearish at this particular moment in time, you need to understand that on the past 5 occasions or 6 occasions, when we have come back down and retested this 17,600 level, support has held. And until we break that level, you need to remain neutral and just understand that this is a very tight type of trading range. But until we get that definitive break, it's best to remain neutral on these markets. As the markets evolve and price action gives us clearer signals of where the intermediate price is going to move, I will bring that to you. But at this particular moment in time, I wouldn't be jumping into bullish nor bearish trades unless, of course, they set up and they align with your overall trading plan. Have a great Thursday evening, everyone, right around the world. I'll see you in the Saturday class in that Pivot Point Pro analysis class. Until then, have a great evening. All the best. Goodbye.